Hello, this is Jordan, and this is your precious metals video market update. This is being recorded on the very late evening of Saturday, February 6, 2016. First, let's start off with looking at how gold is performing against foreign currencies and equities. And gold against the foreign currency basket, which is the inverse of the US dollar index, closed at an 8-month high. It's well above the 400-day moving average. So a month or so ago, one question I had was when it rebounded off support, was it going to be a big rebounder or was it going to roll back over below the 400-day moving average and towards the trend line? Well, I mean, it looks like we got our answer. It's had a good move. It's up to an 8-month high. If you look at gold against the NYSE, and also you can throw in gold against global stocks, the ETF ACWI, both of those have hit a 22-month high. So we're talking about nearly a 2-year high. And if you look at that chart on the bottom, it's quite clear. Just look at the 400-day moving average. It was resistance a year ago. It was resistance at the end of the summer. And the chart kind of made a little bit of a double bottom, and now it's exploded higher to, like we said, near a 2-year high. So this is a major sea change that we're seeing with gold in its relative strength. I mean, there's some major strength here, and as we discussed in our book, this is the kind of relative strength that precedes bull markets in precious metals. Now, let's talk about gold. This is the monthly chart, and it's starting to look a lot different. Now, the question is, I mean, we're only a week into February, but the question is going to be, where is it going to close the month? And I like looking at monthly charts. I mean, I like looking at all charts, but with monthly charts, I mean, you can really clarify and simplify the big picture. And what this tells us that is that 1180 is really the key level. I mean, look at that thick red line. I mean, since gold broke below 1550, 1180, I mean, it traded around that level often over the past 3 years. And it closed Friday at 1174. I mean, it really shot up. And there's resistance at 1140 on the monthly chart. There's weekly resistance at 1160. But just simply put, the key is going to be, where is gold going to close this month? And as long as it closes above 1160, I think that's going to be a pretty good month. I mean, given that it's already the next week, maybe it'll test 1180. I mean, it already tested the 20-month moving average at 1171. So again, the key is, for bulls, we want to see it close above at least 1160, but eventually 1180. I mean, that's really the key, either this month or next month. Let's see if gold can close above 1180, because if it makes a monthly close above 1180, it's going to be really, really hard to argue that we're still in a bear market. Now, if we are still in a bear market, what will probably happen, and again, I'm just giving out the scenarios here because as traders and investors, we need to anticipate what are the probabilities. So if something bearish was going to happen this month, we'd probably see gold fall below 1160. If gold closes this month or next month below 1140, that would be a bad sign that the bear market is still in effect. So keep those things in mind. And I still think that the long-term trend in the U.S. dollar is bullish. Clearly, I mean, this is a bearish chart. Well, not a bearish chart. What I meant is a weekly candlestick chart. And the blue arrows, they show the 4 big weekly reversals all at resistance. That's what we got last week. The dollar was down 2.6%, closed at 97. So, and you can see what happened after those other reversals. And notice that after the first reversal, it tested again after a couple weeks. And so we kind of saw something similar in the last couple months. So it's failed twice at major resistance at 100 in the last 2.5 months or so. So, and what happened after the second failure in early 2015, the dollar went from 100 down to 93. And if we look at this chart, the major support is at 94 and 93. The 80-week moving average is at 93.67. So there you go. And the net speculative position in the dollar as of last Tuesday, because that's when the data is as of, is about 52.5 thousand contracts. So that'll be less in the next report, and that could be fairly low. What I'm trying to say here is that sentiment on the dollar, even in the last month or two, really it wasn't that bullish. The dollar could have broken out. I mean, the market could have broken out. Sentiment wasn't in a position that it was in early 2015. I mean, you can see the net speculative position was 100,000 contracts. So positioning is no longer too bullish on the dollar for it to break out. But now the key with respect to gold and precious metals is let's see if they can really build on this strength, given that the dollar could fall and correct to 93. I mean, that's four or five more percent that it can fall. I mean, let's see if gold can break above 1,200 in this scenario that the dollar is going to come down and test major support at 93. That, as gold bulls, that's what we want to see. Let's have gold break above 1180 and 1,200 and officially be in a new bull market. If the dollar comes down there and precious metals don't really rally that much and they kind of sell off, that would be a bad sign. Now let's get to the miners. Looking at this chart, we plot four of the miners in the GDX ETF. These are four of the top five holdings. The only one we didn't show was Goldcorp, but four of the top five holdings. These four stocks comprise 25% of GDX. And look, they're all at multi-month highs. They're all above the 400-day moving average. I mean, three of them are well above the 400-day moving average. And I mean, when you're looking at these large companies like Newmont, Barrick, I mean, Randgold, that's a great major, and Agnico Eagle. When they're showing this kind of strength, I mean, you don't see this when you're in a bear market that's 4.5 years old that's going to continue. I mean, you wouldn't if you're expecting the bear market in gold stocks to continue, this action here just does not make any sense if you have that conclusion. I mean, this is what the leadership here in the largest stocks in the gold stock indices. This is exactly what you would expect when a new bull market starts. And let's compare the move in the gold stocks so far to the moves that we saw coming off the two recent major lows, which were November 2000 and October 2008. And the Huey is already up 50%. It's already ahead of the other two, although the 2008 one, I mean, that was up about 50% in a week. This was up 50% in a couple weeks. And another thing, in my premium service, I showed a chart. I showed the same chart with gold coming off its major lows in 1976 and 2008. And gold's rebound so far is below what it did following those two major bottoms. Whereas you can see with the gold stocks, they're making a stronger case here that the bottom is in. I mean, a 50% rally is pretty huge. It's again, it's you look at this chart. I mean, granted, there's not a lot of data yet. It's only been a couple weeks, but I mean that huge move. I mean, the key here, what we should see over the next month or two, is the Huey and the gold stock should continue to make new highs. It doesn't have to be up 70 or 80% in the next month or so, but as long as it just continues to trend higher, I mean, it's an obvious statement, higher highs, it's a bull trend, but that's really the next thing we got to look for. What if it corrects for a week or a couple weeks, what's going to happen after that? If it makes new highs, the bottom is in. And what we see here is this is my top 15 index, which contains most of my favorite companies. The median market cap of the index is about $475 million. That's Canadian. And at the top, we have the top 15 index in US dollars. And at the bottom, we have the top 15 index in Canadian dollars. These are weekly candlestick charts. And in US dollars, the index closed right at resistance, important weekly resistance, as you can see, at about 137. And the real interesting thing this past week, you can see the 80-week moving average there at about 124. Looking at the daily chart, the 200 and 400-day moving averages were at 123 and 126. In the index, early in the week, it was set to basically test that level. You know, looking at that and looking at what we saw in the other miners early in the week, I was expecting that they were going to start to sell off and break down again. Boy, was I really wrong. But the point is that when something like that happens and the market doesn't act as you're expecting, I mean, it's running into major resistance, and the market just blew through it to end the week. I mean, the same thing happened with GDX and GDXJ. So that is a change in character, whereas resistance is no longer acting as resistance. I mean, the gold stocks just blew through it. I mean, that's what happens in a bull market. In a bear market, the resistance obviously holds like it's been holding for a while. So that's a character change. It's interesting because a week ago in my editorial I said no character change yet. Now granted I was talking about the metals, but it still applied to the miners. And this past week, that's exactly what we saw, a real character change, especially in the miners. So, I mean, to answer the question, is the bear market over? I mean, nobody really knows for sure, but I do think, with respect to the miners, I do think the bear market is over. There's just too much evidence here. Whereas with gold, it's a little too early to call. We got to see if gold can make a monthly close above 180 and start to trade above 1200. We really have to see if that 1180 to 1200 zone in the next few months, that area needs to become a floor. It needs to be support. So first, we got to get through that. So, and remember, go back to the major bottom in 2000. The miners bottomed several months ahead of gold. So it's possible that, who knows, you could get a big correction at some point. Gold tests 1,000, and the miners, because they're already up so much, they don't go down and make a new low. And I'm talking about GDX and GDXJ. So just keep that scenario in mind. But this past week was just huge. And you look at the relative strength in the in gold, and I mean, clearly this is going to be the year that the bull market starts, and it looks like it already has, at least with respect to miners. And pretty soon we could be saying the same thing with gold. And if you want to get our book, you can go to that address, thedailygold.com/book. We're giving it away for free. We send you a PDF file and an ebook file. And if you get this in the next day or two, you will get the update to the book. We're just putting the finishing touches on a 2016 updated chapter to the book. And if you want to follow more of my work, you can go to thedailygold.com. You can, if you have any questions, comments, concerns, you can email me at jordan@thedailygold.com. Thank you so much for listening and watching. I hope you all found this informative and actionable, and I look forward to speaking with you again and doing another video update in the weeks ahead. It should be really exciting to see what happens with precious metals. We could be on the cusp of a new bull market. That's all for now. Thanks again. We'll talk to you soon.